All right, we're on chapter 2 of managerial accounting. So don't let that confuse you. Again, last chapter was chapter 1 of managerial. We're not going all the way back to Principles of Accounting 1. We're still in Principles of Accounting 2 towards the end of this class. Okay, so we're picking up on some of the exact same things that we did in chapter 1 of managerial. But now we're going to really talk about job order costing. And we're going to add a little bit to, if you'll remember my little diagram I had over here, we're going to add a little bit more to it. We're going to encompass this manufacturing overhead. Okay. So by the time we finish this chapter, you should know everything right there in that little handout. Okay. This little diagram that I have wrote out for you will also help you make a lot of the journal entries that are required in chapter 2. Okay. So we are going to do our first video is going to be over learning objectives 1, 2, and 3. And then the next video, we're going to combine all 4 of these objectives. It's really not that long of a chapter. We're doing a lot of the same stuff we did in chapter 1. It's just a little bit, adding a little bit more to that. Okay. All right, so first of all, we're going to talk about the difference between job order costing and process costing. We actually won't do the process costing chapter because um, we just don't have time to do that one along with all the other chapters that we have. If you are an accounting major, we'll look at process costing when you take cost accounting. Okay. So just kind of distinguishing between the two. When you think of process costing, think of very homogeneous items like gallons of milk coming off the line. They all look exactly the same. Okay. Anything that's mass produced, I showed you those videos of aluminum foil and hot dogs. Those would be process costing items. Okay. Job order costing is going to be things that are a little bit more unique with each other. Okay. That one thing doesn't look necessarily like the other. The best example I can give you is houses. When somebody enters a contract to build a house, they are looking at exactly that house. They are not looking at, well, there are some builders who build hundreds and even thousands of the exact same house. Even then, they probably wouldn't use process costing, but they probably could because so many of them just look like cookie cutters of the one right next door to them. Okay. Job order costing is a little bit different. All right. All right. Um, Figuring out the cost of anything that you make is very important because, again, I'm going to go back to it sounds like I'm a greedy accountant, but our business has to make money. Okay, our business has to make money, and if it doesn't make money, we can't survive. So we have to do something different. Okay, so cost accounting systems help keep up with all of this data to be able to see how much it cost us and what things are costing us the most. A lot of times people will look at their income statement and be like, hey, you know what? Labor is the most expensive thing on there. And that's why that's usually the first thing to go is they'll do a reduction in workforce because labor is very expensive. Okay. All right. So I've kind of already talked about the difference between these two. So I'm going to jump on down to the next one. They give us some examples of job order costing versus process costing. So the product type, job order is batches of unique products or specialization services. Process costing is going to be similar, identical items that are manufactured through a series of uniform steps and processes. I'm not going to go through all of these, but just wanted to grab a few. So, like product cost accumulation, we're going to keep up by job, by process. We're not keeping up with how much is going into each one of those gallons of milk or aluminum foil. We're going to go through a calculation and figure out how much each product costs based on the materials we put into the assembly line. Okay. All right, so we're jumping on to learning objective 2.2. When we're doing job cost systems, we have a job cost record. Now, this is primarily probably more computerized these days. This kind of looks more handwritten, but it is more computerized. This isn't necessarily a manufacturing example, but when my mom was at UAMS Hospital, I thought this was really interesting in how they keep up with costs. So every time they had these computers on wheels, they called them cows, computer on wheels. And so they always had a computer in front of them all the time. And they would, if they needed to give medicine, they would scan my mom's uh, ID bracelet, and then they would scan the meds, and that was a check to make sure that the patient's getting that med. So I really appreciate that because over the years of taking care of my mother, there was a couple of times I had to be the record keeper on that, and I even told some nurses one time, I even said, you cannot give her this medicine right now. It was just given to her a little while ago. And they argue with me, and I'm like, no, you're not giving her that medicine. But UAMS had this system. And so I think it probably is more of a checks and balances to make sure people are getting the right meds, but it's also a really good way to keep up with how much that patient in that hospital costs. So every time they give her a med, that cost can be charged to her room. Then she needed blood, which was, super important to get correct because if you give somebody the wrong blood, you could kill them. Well, in that case, they had to have two RN nurses come in and sign off on that to double check that. If it was just given it like a oral med, only needed one nurse, but they would also scan my mom's ID bracelet. So if you think about like some of these big factories like Kohler, we've gone to Kohler and toured the facility there and and it's really, really cool, and I love watching all that stuff, but they have a lot of checks and balances on what what items get tagged as that job or making that particular assembly line. Okay. And a lot of it is barcodes. That barcodes get scanned and then it goes into the assembly line, but some kind of cost record is being taken care of. Okay. So even if it's a computerized system, it's probably going to spit it out. It's going to look very similar to this. Notice that we have our direct materials, direct labor, and our manufacturing overhead. Remember, those are the three product cost. Okay. And here is sort of the flow of goods. I gave you this in a T account because I really like that. I want you to like understand that everything that's in that diagram is exactly right here in this thing that I drew out. And I also went ahead and drew out all of these. There is your product cost, direct materials, direct labors, manufacturing overhead. Um, my cost accounting teacher taught it this way, and it just made more sense, especially since, you're going to be making journal entries. And then, if I come over here and I look at this, none of this helps me make my journal entries, which is going to be something asked on the test. So that's why I like the way I've done it. If you like this one, that's perfectly fine. As long as you get it right on the test, I don't really care. Okay. All right, so materials, we're going to purchase materials. Often they're stored for later usage. I had mentioned there is a big push for just-in-time inventory where they can like not have this, like bring the potatoes to the factory, dump it right on the assembly line. Don't take it to a warehouse and let it be stored for a week or two and then have to spend more money getting it from there to the assembly line, like planing it out where it just gets dumped right there on the assembly line. Okay. Materials in the production will be broken out between direct materials and indirect materials. Okay. Your direct materials, think of if you are I know some of our textbooks will use a guitar as the product. You can look at the guitar and see, oh, like the wood is probably the direct material. An indirect material might be, I don't know, glue to hold it together. It is part of materials, but it's indirect. And indirect materials that goes to, sorry about that. The indirect materials that goes to manufacturing overhead. Okay. Direct materials go straight onto the assembly line. It is a product cost all by itself, but then indirect materials will be manufacturing overhead. Okay. So they give us one of our first transactions. They purchased materials during 2026. Smart Touch Learning purchases raw materials of 367,000 on account. Okay. We're going to debit the raw materials inventory. Remember, that's our asset, and we're going to credit accounts payable. I'm going to jump back over here and wrong one. That we are right here with the new purchases, raw materials, new purchase right there. Okay. So granted, it doesn't have both sides of the equation, but a lot of times if you can get one, remember, I've been telling y'all that since day one, if you can get half the entry, at least you get half the question right. But sometimes you can reason out the other half of it. So this will help you a lot keeping up with um, where things go in the process. Okay, so that's our first transaction. And you can see they had a balance in raw materials of 70,000 and they added 367 to the raw materials. Okay. Then raw materials are going to they're going to have like a materials requisition, is what they call that sometimes. It may be very formal, like something written up, but it could also be as simple as, hey, we need some more potatoes over here. Can somebody get us a truckload of potatoes and put on this assembly line? Okay. Somebody needs to be keeping up with it, but it can be very formal or very informal. Okay. So there is our raw materials subsidiary ledger. This is that raw materials T account. Again, memorize it in that T account because everything that's in that T account is right here. Okay. So I'm just going to do this really quick. Raw materials. So they said on, okay. So they had a balance. Let's not do that. So I would just stick with those T accounts. This might get you a little confused like it just got me. Okay. I kind of mentioned a materials requisition to get materials to a certain product. Notice right here, they're telling you which job it's going to. Okay. So again, this can be in paper, but it's probably not going to be these days. It's probably going to be more electronic, but it will be assigned to that job. We know that those materials were specifically taken to work on that job. Okay, so they give us a job cost order. This is what we would kind of talked about up in the other objective. There's your raw materials or direct materials, direct labor, and manufacturing overhead. So your cost record now, they have added what they required, they have put it into that job order 27. Okay. So now we're going to make the journal entry. They said in 2026, Smart Touch Learning uses direct materials of 355, indirect materials costing 17,000. The 17,000 of indirect materials is transferred from raw materials inventory to work in process through the manufacturing overhead account. All right, I'm going to come up here because we are looking at this just a little bit differently. When I did this in the first chapter, I didn't have an extra T account for manufacturing overhead. Okay, so I always kind of say this is chapter one. And then all of this together is chapter two. Okay. So now you can kind of see the journal entry that they are doing has to do with the materials right here. Part of it's going straight into work in process, and the other part of it's going into manufacturing overhead. Okay. We're going to work on how this manufacturing overhead goes from here to here. We haven't gotten there yet, but we will. Okay. So, journal entry will be to debit the work in process. That's the direct materials. That journal entry was right over there. Every bit of that journal entry was in those T accounts. Debit the work in process, debit manufacturing overhead for the indirect materials, and then credit the raw materials. Okay. Every bit of this was in those T accounts that I gave you. Okay. You can get a copy of that. I have it uploaded into the Canvas shell. So if you want to print that out, you are more than welcome. All right. So now let's talk about labor. So most companies use electronic labor time to track labor cost. Okay. If it's a manual system, um, each employee completes a labor time record to track and assign direct labor to jobs. More on this to come, but service businesses also use these techniques because it helps keep track of jobs. And I kind of mentioned that in the previous chapter. But when, if you're an accountant, you're working in an accounting firm, if you're working in a law firm, or even just doing taxes, your time is being billed to that customer that you're working on. Okay, your time has to be billable. You've probably heard that term before. And yes, your billable rate is going to be more money than you make, okay? Because there's somebody there who decided to start a firm and they've got to sell your services for a little bit more so they can pay you and pay their overhead cost. Okay, so this is what we do. We don't necessarily, we're not keeping up with a lot of direct materials or anything like that, but we're keeping up with that direct labor in the service type businesses. Okay. There's really these days not a lot of direct labor because there is so much automation, there's so much robotics in manufacturing that we just don't get a lot of direct labor. So some of these problems may have direct labor on them, but in a real world, you don't see a lot of it. You will see a lot more indirect labor. You will see a supervisor over that plant. You will see a maintenance worker over that plant, somebody, a janitor who's supposed to mop the floor. Those are indirect labors. Okay. There's very little direct labor. Okay. So labor costs, they said incurred in 2026, Smart Touch Learning incurs total labor cost of 197, of which 169 is direct. Okay. 28,000 is indirect. Okay. So I'm going to jump back over here really quick. You can see there's your direct labor, goes straight into there, and your indirect labor is going to go into manufacturing overhead. Your whole journal entry isn't here, but 2/3 of it is. Okay. Your credit will go to wages payable. Okay. Remember way back when we did wages expense and wages payable? We're not doing that now. We're not having a wages expense because these workers are making something. The expense of the labor will ultimately end up in cost of goods sold. Okay. All right. So, learning objective 2.3, we are going to talk about allocating overhead. Okay. I kind of told you more on that to come. So, here we are. Okay. So, it's really hard for a business to decide how much a job is going to cost because sometimes it's really hard to decide how much of those indirect labor, indirect materials, and all those other manufacturing overhead items, how much, because you might be using those same things to do several jobs. I always think of a house builder. Even before I built a house, I use this example. They have builders, they have trucks with trailers on them. They probably got skill saws in there. They have, all kinds of tools in those where they drive it around from house to house. They use those tools on more than just one house. Okay. So they have to figure out a way to allocate that to all the various houses or whatever jobs they are doing. Okay. So here they give us a list of overhead costs. Depreciation on the manufacturing plant and equipment. Okay. We won't have depreciation expense here because That's going to go into manufacturing overhead. We would still credit accumulated depreciation, but we would not have the depreciation expense, not for the factory or plant and equipment. Okay. Plant utilities, plant insurance, plant property taxes. So we have all of these overhead items here. Okay. How are we going to make the journal entries for those? Okay. I already mentioned this one, the first one. I said we didn't have depreciation expense. We don't. It's going to go to manufacturing overhead. Okay. And just FYI, this account right here, manufacturing overhead, it is a temporary account. Okay. It starts with zero. It will end with zero. Okay. It is just a temporary account that we use to hold all of this overhead cost. Okay. So we debit manufacturing overhead, credit the accumulated depreciation. Okay. Then plant utilities was 7,000. They are debiting manufacturing overhead, crediting cash. Okay. They did not tell us that was prepaid insurance, so that kind of worries me. Um, they are crediting prepaid insurance because they are assuming that we've already paid for the prepaid insurance in advance. But notice my debits are all going to manufacturing overhead. Property tax, won't have property tax expense, not for the building and the factory, or the factory and the plant, but we will credit property taxes payable. Okay. And they said incurred overhead cost accumulated in MOH. That's your manufacturing overhead cost. Okay. One thing to remember, I'm going to come back over here, and they've got a T account here for manufacturing overhead, but I'm going to draw another one with some words in it. Manufacturing overhead. Actual cost. I have that written in that other one, but I wanted to put it right here. Actual cost is always on the debit side. You just saw all those actual things, okay? What is applied, or this is even an estimate, what is applied is on the left-hand side of the manufacturing overhead account, okay? So you can see we have all these things. You can see overheads a lot, and that happens quite frequently, okay? So before the period ends, or before the period, we're going to calculate a predetermined overhead rate. Remember, I said we don't have crystal ball. We don't really know where some of these costs are going to go, and it's really hard to take tools that we used on one house, take that same truck, use those exact same tools on another house. So that makes it really hard for us to decide how much overhead gets applied to each job. So what we do is we come up with an estimated or predetermined overhead allocation. The one way to remember this, because they're going to throw actual cost in there and try to confuse you, you want to always divide, take an estimate over an estimate. Total estimated overhead cost divided by estimated quantity of overhead allocation. Our allocation base can be many different things. Let's see if they talk about that. Here it is. It can be many different things. We could base it on direct labor hours. We can base it on the direct labor costs. That would be the dollars. This would be a per hour. Machine hours. That would be a per hour number as well. And that's how we would apply it. And when we apply it, that goes from that credit side of manufacturing overhead, come back over here, comes right here. That's where that predetermined rate comes in, and then it gets applied to the manufacturing overhead. Okay, I know it's probably clear with mud. Just hang with me for a little while. All right. All right, so here they give us an example. Smart Touch Learning estimated that total overhead cost would be 68,000. Direct labor cost would be 170,000. They didn't throw any other numbers in there to confuse us, but that they'd have thrown in what the actual direct labor hours were. You won't use that to calculate the estimate. Okay, just try to keep that. That's one tricky thing. Try to keep estimate over estimate. Okay, so they estimated Is this a perfect estimate? Absolutely not. It's better than nothing though. Okay, so the total estimated overhead cost of 68,000, total estimated overhead allocation base. They're basing it on the 170, so they take the 68, divide it by 170, and then they're going to have a rate of 40%. Okay, hopefully they're going to tell us how to apply it. Yes. All right. So they said as jobs are completed in 2027, Smart Touch Learning will allocate overhead using the predetermined overhead allocation. The total direct labor cost for job 27 is $1,250. Okay. They didn't give us hours because we didn't use an hour number to calculate that base. We used it based on dollars, so it will be a percentage. Okay. So all we're going to do is take our rate, 40%, multiply it times 1250. That gives us $500. Okay, $500 will be allocated to overhead. So right here, we have our direct labors. I'm sorry, direct material, direct labor, manufacturing overhead. There's our 500. We just applied it based on that percentage. Okay, so they go into adding all of these up. They have the total cost. And it said that they made, did they tell us how many they made? They told us somewhere. Oh, yep, they told us right here. They made 15 tablets. So they take that 4,500 divided by 15 gives you the 300. Okay. All right. During the period, allocating overhead. So we've got a lot of stuff going on here now. So the journal entry, never mind. That's not what they're doing right here. Smart Touch Learning's total direct labor was 169. Using an overhead allocation rate of 40%, they want us to allocate it. This is that other problem. It's kind of like that one we did just a second ago was a problem separate from that. But this goes back to those transactions that we did earlier. I bet we could go back and find that uh, 169 in that previous objective. Okay, so they're going to allocate 169. They're going to take and base it on 40%. That means our manufacturing overhead is 67,600. So 67,600 gets added to the work in process and it leaves manufacturing overhead. Remember I told you on this manufacturing overhead to think of actual numbers right here and estimate is on the credit side. We don't know if the 67,600 is a good number or not. Okay, we don't know. We're going to find out towards the end of this period, which they are going to pick up in the next learning objective. But just real quick before we leave this one, you can see we had all these actual expenses. We only applied 67,600. So we end up with a balance on the debit side, which means we are under allocated. If we'd had a balance on this other side, we would have been over. So I'm going to jump back over here really quick to my little diagram. And you see right here, if there's a debit balance left, it is under applied. If there is a credit, then it is over applied. All right. I will see you all in the next video.